We just have a quick question here from Prebim asking whether it's okay to take a trade an hour or two before the actual London Open if sentiment provides an opportunity. Should we rather wait for the London or the New York Open before we execute a trade? So firstly, thanks for the question, Prebim. It might be a good chance with this video to just quickly run over a few of the most important times we need to keep track of every day as Forex traders. Now, the first increase that we normally notice in terms of volume usually recurs around the London Open, which is 8 a.m. UK time. But if there is a strong driver from the Asia Pacific session or maybe the prior day's New York trading session, then it won't be strange to see volume pick up slightly before the actual open, especially as some of the futures markets start to open up around about 7 a.m. UK time. So to your question, whether you can consider jumping in an hour or two before the actual open, if there is a clear sentiment and a reason for the markets to want to trade it, you can certainly jump in before the actual open takes place. If there's a reason for traders to get to the desks early and trade in line with that particular drivers, then you can often see an increase in volume before the actual open takes place. So, of course, at the cash open at 8 a.m. UK time, it's always good to just be wary of the potential increase in volume and the price action fluctuations that you might see. It's also important from an equity point of view and how it can affect Forex traders. For example, at the cash open, it's usually a time where you might observe some head fakes in equities as pre-market orders clash with new orders coming into the market. You might see equities rise and fall quickly and basically reverse some of their trends. So always keep that in mind. If you're trading a strong risk on or a risk off tone and equities has been moving up or down, you might see a head fake in the opposite direction at the open. So always just something to be wary of. Then the other important time to watch would be the UK lunchtime, usually between 11:30 a.m. and 1 o'clock UK PM time. Keep in mind that these sessions are usually more tepid, but you might have some early rises from the New York session, which would also be getting to their desk around about that time. So if there is a very important, massive sentiment driver in place, just like some of the London traders might get to the desk a little bit earlier, this is also the time where you might see some North American traders also enter the market. Apart from that, we can also look at the New York Open itself, which usually kicks off another bout of increased volatility as we get US data normally at around 1:30 UK time. And then that is also followed by the actual New York cash open at 2:30 UK time, where we can also, of course, see another bout of flows entering the market. Now, after this, we do have the New York fix normally at 3 p.m. UK time and the London fix at 4 p.m. UK time, which can see another wave of volatility. Apart from the regular transactional flows at the fix, it might also see some additional flows due to massive option expiries. So definitely a time to be aware of that you might see some price action swings and volatility coming into the market. Then after the fix, you of course have the London close at 4:30 UK time, where we usually see a big drop off in volatility. The reason for this, of course, is because of the bulk of the daily trading volume usually occurs during the London session. I think the numbers is about 40% of total trading volume, which only occurs during the London session compared to something like 20% during the North American session. So a lot more volume during the London session. And once the cash open closes for London, that obviously sees a reduction in volatility. So when London closes, we usually see that drop off in active participants. Now, a great time in the market is, of course, those couple of hours where we have the overlap between the New York and the London trading sessions. But as you well know, just because there's more volume and more volatility doesn't always translate into more profitable trades. Of course, the best times to trade is still when you have a clear fundamental or sentiment driver in play to take advantage of, whether that is early in the Asia Pac session, just before an open, just after an open. Once there's a clear catalyst to trade, you can basically enter at any time once you see the type of entry setup that you want to take from a technical point of view. Of course, if it's a unscheduled event and it's a massive market move, then you can, of course, just jump in at any time when it occurs. But if it's an ongoing sentiment like a risk on tone that carries on from the Asia Pac to London, you can certainly consider taking that trade even before the actual London Open. So, Preben, I hope that helps. Any other questions, don't hesitate to let us know.